Salam, everybody. This is Investor Sheikh back at it again with another video. And today's halal stock of the week is Canada Goose, ticker symbol GOOS. So as you see, I'm just scrolling through the images of Canada Goose, and as you know, they sell jackets and coats. The funny thing is, the way I found out about this brand was during college, as I noticed a lot of students were wearing Canada Goose jackets. And then that's when it hit me. These are very expensive jackets, and a lot of rich kids wear Canada Goose. But it's good knowing that it is a halal stock. So let's take a look at the stock. So we're on Zoya, and as you see, it is Sharia compliant. Stock price is trading at $39.04. It has a $2.29 billion market cap, no dividend, 52-week low of $26.74, and a high of $50.05. PE ratio is pretty high at 49.65, and earnings per share is 41 cents. So a description of the company is: founded in 1957 in a small warehouse in Toronto, Canada, Canada Goose is a lifestyle brand and a leading manufacturer of performance luxury apparel. Every collection is informed by the rugged demands of the Arctic, ensuring a legacy of functionality is embedded in every product, from parkas and rainwear to apparel and accessories. Canada Goose is inspired by relentless innovation and uncompromised craftsmanship, recognized as a leader for its Made in Canada commitment. In 2020, Canada Goose announced Human Nature, its purpose platform that unites its sustainability and values-based initiatives, reinforcing its commitment to keep the planet cold and the people on it warm. Canada Goose also owns Baffin, a Canadian designer and manufacturer of performance outdoor and industrial footwear. So as you see, they sell luxury apparel. So their jackets are going to be from $600 upwards to a few $1,000. And I know you're getting high quality jackets for that price, and it's going to keep you warm in very harsh cold weather. Especially in Canada, it's very cold over there during the winters, as well as the northern part of the US. The winters can get pretty harsh, I'll tell you that. So of course, if you're paying a lot of money for a jacket, you're going to get a high quality, and I would expect these jackets to last a very long time. They're durable, probably lightweight, and just makes you comfortable. So with that comes at a premium, of course. So they sell luxury outerwear. So let's take a deeper look in the financials of this stock. So we're on Yahoo Finance, and as you see, the current stock price is $39.04. So looking at how it has been doing in the month, it's been going up steadily. Then it kind of dipped down from its peak over here at around $42, and now it's in the $39 range. But as you see here, the stock has been doing pretty good the year to date. It was as low as $28 and went up as high as $50 within 2021. This is the 1 year, so they were up 44% in the past year. And here's the long-term growth that we're seeing here. 142% growth over the past 5 years. So back in 2016 or 2017, it was in the teens. Then it shot up over time as high as $72 back in November 2018. Then it just had a long-term decline from its all-time high all the way to 2020, where it returned to the teens and then it's going back up to the 30s, then reached the 40s, and it's back in the 30s. So it has had quite the roller coaster trip. So, if you were to purchase this stock now, you would be getting at a much better value than if you were to buy it at the peak back in 2018. Okay, so looking here, that's weird. So Yahoo Finance says that this stock has a $4.3 billion market cap. So there's a huge discrepancy between the Zoya app. But I would take the Yahoo Finance market cap, and this seems to be more accurate. And it says here the 1-year target price is $32.90. Perhaps they may be saying that the stock price might be a bit overvalued right now. Okay, so looking at the performance. Let's give it some time. Okay, so as you see in this chart here, it has had year over year, year after year growth from 2018 to 2020, which is excellent. Although there was a slight decline in 2021, but it's still slightly higher than what it was in 2019. Slight decline, but still pretty good. It's not drastic. And then the earnings are positive. It was really high in 2020 and then decreased in 2021. And then looking at the quarterly, the biggest revenue increase was in Q4 of 2020. But then 2021 was a bit of a disappointment as you start to see a quarter after quarter decline, which doesn't look good. And this is for both the revenue and the earnings. So Q2 of 2021 has saw negative earnings for the first time. As you see in previous years, they've had positive earnings. So this might be a bit of a red flag for the company right now, but hopefully they do plan on improving so they can get back to a positive earnings report. Okay. So as you see, they beat earnings in, that's 2017. I don't know why they're showing that. Okay, so let's take a look at the analysts and what they say about this stock. So it is between a strong buy and a buy, with analysts giving a price target of $39.98. So basically the stock price is close to that bullish analyst's price target. And one analyst gives it as low as $25.97. So this other analyst is pretty bearish. So based on what the analysts are saying, this stock could be overvalued at its current price. Although some of them do say that it's a buy, but you gotta do the research and determine for yourself whether or not you want to purchase this stock. Okay, so let's look at the balance sheet. I've got to find it here. Okay. So looking at the income statement, they do have a net positive income of $63.6 million. And then looking at the balance sheet, they have $477 million in cash, total assets are $1.5 billion. And liabilities are at $907 million. So their assets are slightly greater than their liabilities, but it's a pretty large number for the liabilities. That's one red flag to take a look at. The total current assets are $896 million, and current liabilities are $262 million. So that's good to know. For their short term, they're good. The liabilities are significantly less than their current assets. So the issue here is mainly their long-term debt. So that's not a concern. They can pay that off over time. So that's one thing to watch out for, is the high liabilities relative to their assets. So all in all, this is a pretty good company to research and take a look at what they have to offer and whether they have any more room for growth. Now, currently, I do not have a position on this stock, but I will be keeping it on my watch list. Perhaps maybe get in at a much better price point, because right now, $39 seems a bit steep. Maybe anything below 35 or below 30 would be preferable, but that might require a crash in the total market for that to happen. Now, as always, I'm not a financial advisor, so please don't buy this stock simply because I'm talking about it. Please do your research on this company. Look at what they have to offer in terms of apparel and see whether they're getting sales, consistent sales year after year. And then if you feel like this stock has more room to grow, by all means add it to your watch list. This is Investor Shake, checking out.